This is Las Vegas Real Estate Now, where we bring you the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld, and we've been selling homes here in Southern Nevada since 1988. And we have Jeff Edwards. Jeff's with Piercy Bowler Taylor Kern. Jeff, I wanted to talk to you today, first and foremost, about this new tax laws that we just had passed. Tell me a little bit about first of all, we got a new corporate tax rate.
Got a new corporate tax rate. It was a complete overhaul on our old tax rates, and what we get to claim is deductions and exemptions and business deductions. Now that they've got a flat tax, and it's 21%.
Okay.
So if you've got a regular C corporation, at the end of the day, you're going to pay 21% tax on the income, the net income.
Right.
Which is huge. It helps us compete in the international market. In addition to that, they brought in an adjustment for depreciation expense. It's called bonus depreciation. Bonus depreciation, you can write off 100% of an asset that you buy in current year. They write it off over 5 years, 20% a year.
Right.
With this new bonus depreciation, they write the whole thing off in the first year.
So they can run out, buy a van, and deduct it from their income right away,
Correct.
as opposed to have to spread it out over the next 5 years.
Correct.
Are there other changes within what I can write off in that? Is there more or less? Is it basically the same within the body of the taxes?
It's basically the same.
Okay.
But
All right.
what you're doing there is you're hitting it on both sides. One, you're not paying as much tax on your income, and now they've given a provision where we're now going to drive your net income number down.
Right.
Your taxable number down. We have other kind of corporations. We have an S corporation, which
Right.
is a flow through, and a partnership, which is a flow through, and an LLC, which is a flow through. And they've come up with a 20% tax deduction of the income that flows through
Right.
to the members or the shareholders.
Right.
And that's huge. As you know, a flow-through corporation or a flow-through entity, they're taxed at the individual tax rate. Prior to this law, the top tax rate was 39.6%.
Right.
It's gone down to 37%. The 15% tax rate has gone down to 12%.
Right.
25 has gone down to 22, and that, we go on and on and on. So everybody that pays taxes is going to get
a break.
Yeah, is getting a break or a raise. They the standard deduction for those who don't itemize their deductions doubled.
Right.
And that's huge.
Big. No question.
For a married filing joint, the standard deduction prior to the law was $12,700. After the law, it's $24,000.
Wow. What about personal exemptions? Explain that to me.
Okay, the personal exemptions, everybody gets an exemption on their tax return for them. If they're married filing joint, they get an exemption for their wife.
Right.
If they've got dependents at their homes, they get an exemption for each one of the dependents.
Right.
That has been repealed. We have no more exemptions. Another kick in the pants is that we've been able to deduct our state and local taxes.
Right.
And our real estate
estate.
taxes. And they've put a cap on that, and the maximum you can deduct is $10,000.
You've been listening to Las Vegas Real Estate Now with host Harvey Blankfeld. Please tune in every Saturday at 11 a.m. right here on News Talk 720 KDWN.